All right, guys, good evening. It is Tuesday, April 2nd, 2019, 7:20 p.m. New York time. And I hope you guys had a great day. Again, 7:20 p.m. New York time. So I hope you had a great day or having a great day, depending where in the world you're watching. And just want to make a quick video, guys. Last night I made a video, so go back and watch it if you haven't seen it, on the Australian dollar monetary policy, their cash rate release and the accompanying statement. And so I did a video last night just kind of preparing you for that risk event. And as predicted, they did not change the rate, which was fully expected, that they kept the rate at 1.5%. And as I mentioned, the key was going to be in the statement. And there was a lot of mixed opinion about where they were going to go. There were a couple of investment houses, although that was kind of the minority, that was suggesting they would probably get a little bit more hawkish. But most of them, I think, believed that they were going to kind of stay neutral and really not really change their direction to the market. Well, so what happened was when the statement came out, it was a nothing burger at first. They pretty much, again, they didn't change the rate, which was expected. And they really didn't say too much early on in the statement. And so when it came out, the Aussie rallied, a few pips and then stopped, and then went back to pre-release levels almost immediately. Within minutes, it was back to where it started. And there was basically a big fat indecision candle on all the Aussie pairs, which is really annoying if you're a trader, because that's how people get whipsawed in and out of trades. When you see it spike in one direction, come flying back, and then spike in the other direction, and come flying back to the middle, and then you have this, this doji candle. And those are just indecision candles. So by then it was, for me, it was like 11:30 at night. And I was ready to go to bed. But I'm sitting there with my news squawk on, listening and watching a little bit of TV, and had the earbuds in one ear and listening to the TV with the other ear. And then some more news started coming out, and they started reading some more from the statement. And what you found was, basically right here, there was a tweak to the accompanying statement suggesting that keeping the status quo may not be enough to support growth as it has for the past 2.5 years. Instead, data and developments will be monitored to see if the cash rate requires an adjustment. And so this is what I was talking about, guys, where they basically said, hey, things are pretty good, and we're not going to do anything right now, but we're kind of seeing that maybe down the road we might have to do something. And what they're referring to is weakness, and therefore a potential rate cut down the road. And again, when I was doing the video last night, I said, look, the global economy outside of the U.S. is weaker now, including their brethren next door in New Zealand. And so, the Aussie is not shielded from that. And although trade has been a little bit better in terms of trade talks with China and the U.S., which, China is a major trading partner with Australia. So that's why that's important, that there's stable trade relations. They basically, the bank just basically said, yeah, we're going to keep things cool for now, but we reserve the right to step in if things kind of weaken anymore. And so once that news got digested, all of a sudden the Australian dollar started selling off. And that continued throughout the day today. And so I ended up taking shorts on a couple of Aussie pairs, and I went long on the Euro Aussie. As I said last night, I was a little hesitant taking a Euro Aussie long because of the fact that I had a larger corrective pattern on the daily chart that I didn't feel was over yet, and that was going to keep going down. But on a shorter term time frame, I felt there was trend was ending and that it was going to go up. And that is indeed what happened once the market kind of got its head wrapped around the statement. So I did end up taking that long. And so If we just look at a couple of the pairs briefly, let's see here. Hold on one second, guys. I got to make an adjustment here. I'll be right back with you. I'm going to pause the video for a second. All right, guys, I'm back. Sorry about that. I can only be logged into my trading view on one computer at a time, and I was logged in on my other computer. So if I tried to log in here, it wasn't going to let me. So I had to pause the video, go log off my other computer, and come back here. So sorry about that. So here we are at Euro Aussie. And this is what I was, if you watched last night's video, I was looking, this is the 12-hour chart. It would be about the same on the daily. It's just a little harder to see it. So on the 12-hour, the daily, we had, going back to December, we had this big move up, 1, 2, 3, 4, 5. And then I felt this whole move is what they call a big giant ABC corrective pattern, an Elliott wave zigzag pattern it's called. And so I felt like, the Euro Aussie, especially with the Euro being fundamentally weak, still that this, had potential to keep going all the way down here. And you know what? It may eventually get there. But I also said that on a shorter time frame, that I was looking at this in the red to be a smaller 5-wave pattern that was ending. 1, 2, 3, 4, 5. And I want you to look really close at where this 5 is. And let me see if I can crunch this up a little bit. So I did not change this before I started recording the video. This is the 5-wave pattern that I had drawn out last night. And you can see right where price went to, right to this 5. And that's not by coincidence, guys, because what I did is I measured from wave 1 and wave 5 are typically about the same length. So I measured from here to here, which was wave 1. And then I measured from here, which is the end of the wave 4, down to here, which is the same length, and that's where I estimated the 5 would go, and look where it went. So when the news came out, it spiked down. Like I said, the Aussie initially strengthened. So in this case, it would have gone down because it's the Euro Aussie. The Aussie strengthened for a few minutes, it spiked down, and then it came right back to where it started, and then it just sat there for about 20 or 30 minutes. And then it took off, and you see this candle was this was the candle, the reactive candle, once the market kind of got its head around where things were going. So basically, and you can see now what's happened is that we have broken to the upside, and I'm going to go down a little bit further here. So again, here was that reactive candle. We broke out of this trend line here, and we came up, and then early during the London session, we came down and tested this trend line from the top side. That's this little wick right here. This is kind of basically the big traders, tapping some stops, and then it went up and kind of went up the rest of the day. A couple of little pullbacks up, but there we go. Okay, so like I said, eventually I do think that there's a strong possibility that this will turn and continue down on the longer time frame, and we will eventually get down to this wave C. We go back to the 12-hour, but it might just keep going, and that would invalidate this. But until I'd have to see price get probably up into about this area where you see the crosshair before I would invalidate this downtrend. So, but I will be flexible because I don't really care. I just want to see a pattern, and I will trade it. But fundamentally, the euro is still weak. But basically, the euro is weak fundamentally. But from a short-term standpoint, it's kind of neutral. And so, if the Aussie is more in the short-term bearish, and the euro in the short-term is neutral, well, then the euro Aussie is going to go up, at least in the short term, right? So that's what I'm looking at. So there you go. So that's what happened. So that was Euro Aussie. And if you look at any of the Aussie pairs, you're going to pretty much see the same thing. So I talked about last night, here's Aussie Swiss. I talked last night when I made the video, price was up here at the top of this trend line. And I said, okay, what are we going to do? Are we going to break out? Because this looks like a declining wedge that eventually you see break, or are we just going to bounce in here again and come back down and retest this trend line to the downside again? And clearly that's what we're doing. So I do expect this is going to come down again, and it's going to hit this trend line, and then it'll probably bounce again. At some point, we will get a breakout. But right now, we're still inside this trend line, and I, again, would only be looking for shorts, not only because we're inside this trend, these trend lines and moving back down, but also, again, because of the fundamentals. Okay. Aussie dollar, as I mentioned last night, I had this drawn as an ending diagonal heading into wave 5. So far, that's still a valid idea that this is going to be the wave 5 down. Again, we will work our way back down to this trend line, and eventually that will end this pattern, and then we'll shoot back up and probably blow right through here when that happens, if this is actually what this is. And that's what it's looking like at the moment. So again, Aussie dollar, I'd probably only be looking for shorts, and the dollar is still fundamentally the most sound currency, so certainly there's opportunity there. Aussie Canadian, again, this was one where I told you I had conflict because we had a 5-wave breakout here, and then you saw I had this blue arrow drawn here last night. I was expecting to come down here and bounce and go back up. Well, it didn't happen. We've broken back through this trend line, and so this was the one where I had conflict. But there's not really fundamentally a lot of conflict here because, again, the Aussie was weak, and the Canadian dollar is at least in the short term, is strong right now. Oil prices were up today, and the Canadian dollar is still living off some good news that came out last week. And so, this is not unexpected. But from a pattern standpoint, it was a conflict. Aussie yen, I talked about this sideways, choppy, sloppy crap, and of course that's still what we're in, and I'm not trading this pair. I just don't like this mess in the beginning, so even though there might be opportunity here, I am not trading that. And then here we are on Aussie Kiwi. I did not take this because really the Aussie and the Kiwi are both weak right now, and so it's going to be a push-pull, which one is weaker on which day. And so, again, the Aussie Kiwi has been going down for so long. And technically, we still haven't technically broke this, if you, depending where you want to draw this trend line. This is why I don't really like trend lines, because it's like, where do you draw it? But the Aussie Kiwi has been going down since August of last summer. This was the high, August 8th last year. Okay, so what, for eight months ago, right? And we've been going down ever since. And so until we break through here, maybe take out this swing high, I think you still have to look at the Aussie Kiwi as being weak, but it's not really one I'm interested in trading because both currencies are pretty weak right now. Okay, so anyways, guys, that's the wrap up on that, and just brings you back to my point that when there's indecision about where the news is going to go, I will just sit and wait for it to come out, and I will wait for the market to find its footing and find a direction. I was going to be perfectly happy not trading it at all last night because, like I said, when it first came out, it was a nothing burger because the market did not put out anything new at first in terms of the statement. And so the market really didn't react. There was a little whip and then back to where it started. But it wasn't until people dug into the statement more and we found that nice little pearl that put a little bit more dovish tilt on their statement, and then that's what sent the Aussie down. So, and I think that probably will keep it under pressure for a while. Now, I did want to point out one more thing before we go, and that is tonight, in just under an hour from now, we have more Aussie news coming out. We have retail sales. Now we're here Tuesday. We have Australian dollar retail sales coming up at 8:30 New York time, which is just under an hour from now. Are expecting a 0.3, which is an improvement over the last report of 0.1. And so I think they're, while these numbers sometimes aren't really big market moving, I think they're going to be looking, the market is going to be looking for data-driven things to kind of hang their hat on. So, we had the RBA say, well, we don't really know. Maybe things are weaker than we thought. So if you get a really strong beat on this number, then that could, cause the Aussie to temporarily strengthen. Although I don't think that would be a very big driver because retail sales is not the biggest thing. Although it's more important in a small economy like Australia than it would be, say, in the United States. But so if it's positive, unless it's a huge beat, I would probably not trade it to the upside. I probably would look at that as a selling opportunity and let the market kind of burn out and then short it again. However, if it comes out worse than expected, I'd probably be looking to continue to sell the Aussie. So that's just my opinion. So again, if it comes out at 0.3, 0.4, 0.5, somewhere in there, and it rallies up a little bit, then fine. I'm not going to trade those long. I'll let it sit, and I would almost bet that come the London session tomorrow morning, it will go back down again. But I'll be looking for corrective patterns to confirm that. But if it's negative, I would expect that that's just going to feed into the negative sentiment that we saw last night, and that will continue to see it go down. So keep an eye on that. Tonight, trade balance also comes out at the same time. This is not as important, this kind of orange level, but if there's a huge beat or miss on this, it can feed into it. If you get one positive and one negative, they're probably going to wash each other out. Because again, I told you trade is a bigger deal in an economy like this. So even though this is orange, medium impact, this might have a bigger effect. So if they both come out the same, like both positive or both negative, that's going to have a bigger impact. If one comes out positive, one comes out negative, then they're probably going to kind of cancel each other out. But if they're both negative, and they are expecting a lower number on the trade balance, but actually, so if they, let's see where we were last time. So last time we were above forecast at 4.55. So if they both come out negative, and this one they're expecting a worse number. Retail sales are expecting a better number. If they both come out negative, then look for selling on the Aussie. If they both come out positive, you might see a bounce, but unless it's a huge beat, I wouldn't expect a sustained move up. And if one comes out positive, one comes out negative, it's probably not going to do anything. It'll probably chop around for the rest of the session, and I think ultimately it will continue to the downside. So that's it, guys. So I just wanted to make the follow-up. Hope you enjoyed it. Please share the video, like the video, comment, like the channel if you're just stumbling across it here on YouTube. Hope you enjoyed it. And again, make your own trading decisions. I don't make trading recommendations. This is really just for education, just to tell you how I analyze the market and understand both the technicals and the fundamental reasons why prices move. And it's not just all about one or the other. You really have to use both, in my opinion, to be successful. So, all right. And so that's my view of things. And you take your own trades, make your own decisions, use your own risk parameters, and make your own decisions. But so anyways, guys, that's it. Hope you enjoyed it, and I will talk to you in the next video. All right, take care, guys. Happy trading.